Accounting software has improved over the last 35 or 40 years since it first appeared on personal computers in the 1980s. Accounting software publishers inevitably call it quick, easy to use, and simple. The implication is that today's accounting software is so easy that anyone can use it to produce financial statements automatically at the push of a button. But it isn't that smart. If you don't understand bookkeeping, you can't do the bookkeeping any more than an 8-year-old can write a book just because you give him a word processor.
Take a look at the warning that appears in Xero accounting software when posting and adjusting journal entry. Too often we're led to believe that accounting software helps the small business prepare financial statements automatically.
Most investors or lenders want to see statements with a report from an independent public accountant. Accounting statements prepared by the owner or manager of a company, or a bookkeeping firm are usually viewed with some suspicion. These days, even an audit report from a professional accountant may have limited value if the investment is significant. In fact, more and more skilled investors will ask to perform their own due diligence. Often they look at characteristics beyond the scope of financial statements in any case.
Invoicing, simplified customer payments, and receivables tracking are probably why most small businesses decide to use accounting software in the first place, or it should be. However, managing payables tends to happen much later in the evolution of a small business. Most often, small businesses use credit cards for the first few years and not formal accounts payable systems. It's pretty hard to say what the author meant by a professional bookkeeping service. On the next slide, we'll discuss Canada's certified professional bookkeepers in a little more detail. However, the Canada Revenue Agency will evaluate tax filings on the intrinsic reasonableness of the filing itself, and to some extent on their past experience with the taxpayer and the taxpayer's representative. Choosing a professional bookkeeper or a professional accountant is no guarantee that you will sail through an audit. If a tax preparer gets a reputation for poor quality submissions, their association with the tax filing will actually increase the risk of his or her file being pulled for audit. Recently, I took a professional development course that discussed various accounting software packages and related add-ons. The majority of attendees are actually certified professional bookkeepers who are looking to get their professional development points. I was a little surprised to see how many of the bookkeeping firms that the attendees worked for were actually filing tax returns. It seemed to me that it was more than half. The problem is that income tax is very complex, and no one actually knows it all. However, CPB's study their course of study includes 36 hours of studying income tax, sales taxes, payroll, and business law. So in other words, they spend less than a week studying what professional accountants spend at least 4 semesters on at university. And from my perspective, those 4 semesters is really only adequate to get a foundational knowledge. It actually requires years of experience to begin to get competent at income tax. In fact, the Certified Professional Bookkeepers of Canada, CPB, expect their members to work with professional accountants when preparing financial statements. They have no particular knowledge expectations when it comes to income tax. So if you look at their website, what their knowledge expectations are for members, you can see when it comes to year ends, financial statements, they're supposed to be working with accountants. But when it comes to income tax, there's nothing there. There is no knowledge expectation. All of this is not to say that you shouldn't use a CPB for your record keeping needs, but you need to moderate your expectations when it comes to income tax.